Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Forex Futures and More Roundtable. We're looking at crypto right now. Bitcoin's coming in on a big level. I've also got my 9 EMA locked and loaded on my MT5 platform. I'm watching silver closely, really waiting for potentially a buy signal to set up here in short order, but I'm on the 1 minute time frame. We may get a trade today during this live stream. That would be absolutely fantastic. Got a lot of great feedback from the workshop that we did yesterday, the live webinar that we did yesterday. So having a little bit of trouble on the live chat from YouTube. I can see that Restream IO is not doing us any solids hooking us up properly, but that's okay. So if I don't see your chat coming through on the YouTube channels, I'm sorry. I always answer all the questions if we get a chance, but today it looks like we may be a little bit challenged in that regard just because the live chat does not appear to be working. However, over in our How to Trade trading room, we've got a lot of the new community back, or the old community back, excuse me. A lot of new faces too, though. Tuco, good to see you. Andrea Garwal, always a pleasure, Andrea. All right, we've got a few chats coming through there on YouTube. Jason Max and Yo Shane. Yo, Jason, how you doing? Interesting type of a situation that we're sort of faced with today. Not a tremendous amount of huge market movers. We're used to just this incredible volatility. Today, I watched crude oil do absolutely nothing, and then it broke north by about $2 just right out of the drop of a hat. Great trading. Actually was fortunate to catch a few ranges there and having a solid trading day today. I feel very good about it. Wednesday is one of those days that I do like to target, and today was no different, just a little bit slower than I expected. Euro USD not doing anything, really trading in a phone booth. That was another one that I'm looking at, Euro FX futures. Gold, big day for gold. We're all over the place with precious metals. And then right now, I'm sort of watching this silver futures market and thinking that we may get a trading opportunity here on our 9 EMA strategy. So we're starting to sell off just a little bit. You can see silver coming down. This is the the March silver futures contract. And remember, this is one of those that you can trade on Switch. It's a CFD based on a futures contract. We've got a How to Trade Silver video video in the works. Not sure when it's going to be coming out, but it may be coming out relatively soon. So you're going to definitely want to take a peek at that. You can see we sort of are looking for potentially a trade idea here. I don't know that we're going to have enough equity in the account to actually take the trade, but if it does come through, we're going to see. I remember I got a demo account that's sort of I don't know what it's got right there. It needs to be reset, that's for sure. But just sort of looking at a potential trade idea here developing on our silver contract. So we're watching that closely. A lot of action in metals right now, guys. A lot of action. All right, everybody, let's go ahead and get to it. We've got some fundamentals to hit today. Not too many of them, though. I think that it's going to be a relatively light day with regards to anything that's hugely market moving. We're not seeing it. We're just not seeing that type of action today. I mean, you notice you look at your equities. You're up a little bit in the Dow. You're down a little bit in the S&P 500. Bitcoin's off big. Nasdaq's the big loser again, off about 2%. Now beneath that $25,000 level. Gold. Gold is reversed course. Silver's reversing course right now, off of early gains, stiff early gains. So whipsaw day, a lot going on. There's going to be a lot of things that we can trade today. Let's go ahead and start off with Bitcoin. Bitcoin is one of those that we're all looking at. No matter really what kind of trader you are, we are all looking at Bitcoin right now just because of the volatility. Anytime we see anything crazy, I'm going to always step back to 10,000 feet and I'm going to say, okay, what's going on in this market? For Bitcoin right now on a yearly chart, very rarely will I go to the yearly charts, but it is sort of February, early February. So we've got a chance maybe to see some of these levels for the first time. And right now we've broken beneath last year's low in Bitcoin and we are trending south right now. The print's right around 72, 250, somewhere in that zone. 50% retracement of your last, 4 years range. Sort of you're working off your spike low back in January 2022. And then you've got sort of the epic run, the generational run that was 23 and 24. And then sort of a pullback year last year in 2025. And now we're coming off a little bit more. 50% of that range is right around 70,876. That's a big one. Definitely keep an eye on that zone, because if this zone right here does not hold, if it doesn't draw the bidders that we think it's going to draw, then you're going to see that big-time sell-off down there to 62%, which is right down around 57.80. I got asked the question the other day, Shane, where's Bitcoin going? What's it going to do? Where's it going to go? And I go, I don't know. But I do know this. If 7086 doesn't hold, or 70,876 doesn't hold, 71 doesn't hold, 7250 is not getting any bids, then you're going to see a crash. This will make another leg down to about 57.8, and that's going to be a big deal for Bitcoin traders, because right now the question with crypto is this. If I'm a hodler, am I still a hodling? And hodl is sort of the name for holder if you're in Bitcoin. So what exactly does all that mean? Is it time just to sort of say, okay, we're going to grit our teeth and hold this position? Or is it time potentially to say, okay, we got to do something? Maybe we got to readjust our leverage, readjust our exposure. Take a look. I mean, right here, yearly support's no joke, 70,876. That's a big time zone. If it does not hold and it's being tested right now, you're going to have a chance to make a deeper run, maybe down to 60, 50, maybe down to 57. We talked a lot about that level, that 80 level. We knew that once that broke, all bets were off for Bitcoin. 85 was sort of our first area where we're looking to bid right ahead of that. And then we talked about 80, and now we're trending beneath last year's lows. We're off, let's see, on the session, we're off about 5%, 4.25%. And you can see that this market is starting to be dominated by institutional players. And the reason why? Volumes are high. The volumes generate the momentum. Then the momentum algorithms kick on the back, and they start moving price action. Essentially, that's what you've got going right here, and it's not a good scenario. It's not a good scene, especially if you're a Bitcoin hodler. So this right here, this daily, not good. We got that beautiful compression, just what we were looking for, right around 75. So if you were a bidder from 75, you should have made some money on that scalp. You should have done all right on that scalp. That's not bad. But now, sort of, you've got that bearish pennant setting up on the daily, nice downtrend break, compression break. If you want to back the trade up a little bit more, you know, you could almost talk about sort of a reverse Elliott wave, which we don't do much, but there's sort of your 1, there's your 2, there's your 3, and the question is, are you going to get a 4 and then a 5, or are we just going to go sideways? Very difficult to say. Very, very difficult to say, but what I will say is this. You've got a lot going on in this area right here, and there's going to be a lot going on right there at 72. So you're definitely going to want to be aware of what's happening in this market. It is very bearish right now, and it's sort of as a surprise to a lot of people out there. I thought that we were pretty bullish. We broke. And once we broke, all bets were off. All bets were off. And what that means is nobody knows where we're going. It looks to me like we're going south. All right, let's go ahead and get back on over to our silver market here. You can see silver, okay. We sort of had a nice little rally right there off of those lows. Let's go ahead and see about my navigator. One of the ways that you have to troubleshoot this thing with these, and I'm going to make a video on it to show you exactly how to do it. But one of the things that you have to do is typically if you find your EA is not firing, then you just go ahead and reattach it, and it should in fact give you an opportunity potentially to trade. You can see right there, we should be getting a signal set up right in this zone. We were beneath 30, and then there was your close above that 9 EMA. So, and sometimes you just have to go ahead and get out of the chart, get another chart going, something like that. So remember, the troubleshooting tips are relatively straightforward for an EA, and I can go ahead and show you how to do those at some point in time. But you drag and drop functionality, relatively straightforward. You can see that's what reloads everything. Let's go find our silver contract. A lot of times MT5 will just sort of get bogged down with regards to changing prices and changing duration. See, even that data, that pricing data, is a little bit off there on that silver contract. So I'm going to go ahead and leave that alone for right now. We should be getting something that we should have got a buy signal right there. I'll have to go back and troubleshoot it. But essentially, what happens with MT5 is it is a little bit finicky. It's a little bit finicky. So typically, if it doesn't work, if your EA doesn't function, remove it from the chart, close out, open a new chart, and then add it, and typically that works just fine. So you'll notice that we've had some really good buy signals earlier today on the silver contract. 1 minute chart right there, boom, boom, boom. And then we basically are waiting for that other signal, and you can see we should have got it probably right there was the buy. Oversold territory, break above the 9 EMA. That was the buy. So I'll investigate that. But honestly, when you're troubleshooting and bugging these things, that's why we like to do these live, because sometimes if they don't show up, that means I got to go back and maybe look at the code and do some troubleshooting. Relatively certain it's there, though. Just takes a little bit of doing. And once again, I'll make a video that shows you how to debug and debug and troubleshoot all these things, so there won't be much guesswork involved. All right, everybody. Let me see. Lewis, good to see you, Lewis. Welcome. T. Marina, hello, T. How's it going? Eyes hazy. For the past 2 days, the NASDAQ has been going the opposite way of the Dow at the New York Open. That's called divergence. So the Dow's up, right? The large caps are up. They're moving higher. And then what do you have? You've got the tech stocks are moving a little bit lower. A lot of it has to do with what's going on in our U.S. Federal Reserve right now. There's going to be some news events we're going to cover here in just a second. I'm going to show you there's some tumult over the Warsh nomination and how it may not go through. I think it's an interesting type of a dynamic. We're going to go over that in just a second. Bobby Bob, good to see you. Bobby, welcome. Hi, Coach. What's happening? Financial technicals not working. Two markets technicals not working. Well, I mean, we're all over the place. We're all over the place. We're going to have to take a look at what exactly is happening, but bigger than life. I mean, it's a product of your news cycle, but it's also just sort of a strange day to be trading. I mean, I saw the break in crude oil earlier. Didn't really get a break in much else, but whipsaw action definitely in your metals markets. A lot of times when things don't work, when technicals don't work, it means that something else is going on. Hard to predict when that's going to happen. That's why we have risk management. You always want to make sure that your risk management is dialed in. That way, if you have a bad day, it doesn't blow your account out. Very, very important that you understand that. Sometimes technicals are great. Other times they can be almost a detriment. You got to understand what's going on in the markets first. I'm going to show you today's news lineup and why we had some releases during that U.S. session that could have caused a little bit of short-term volatility and shaking you out of trades. Remember, if you want to trade anything that we talk about on this live stream, be it the markets themselves, the technicals, the EAs, whatever you'd like, head over to switchmarkets.com. Go and get your free demo. Get your when you're ready, level up, fund your trading account, whatever you want to do. We have Islamic trading accounts. There's all sorts of social trading options. I like the resources. The resources is sort of what I've been working on for a long time now. The EA tools for traders, and this is probably going to be your most important EA right now, and that's your risk management EA. That's going to tell you exactly what leverage to use, what position size to use, and also what you're going to need to do to dial in your stop loss locations. Interesting stuff. So if you haven't checked out the Risk Manager EA, especially if you're trading something like silver futures or gold futures or any of the metals, you need to definitely get in there and take a look at what's going on. Got a question right there. Yes, sir. Yes, sir. Gaming. Good to see you. Yes, sir. A solid buy for the dollar yen in the Asia session. Gold selling in the New York session. Man, I love key levels. Key levels are fun. Had a beautiful trade earlier today on WTI futures from a key level. It was absolutely fantastic. I guess I could show you. Let's see. Let me get right here. I got to close out of that. Excuse me. Been a full contact day on the markets for me. A full contact day. That's what I call getting in and getting involved and doing pretty well on a couple of different trades. Okay, this is typically what my charts look like when I'm trading them. This is a good look at the WTI futures March of 2026 daily. These are the dailies, and you'll notice every line on that chart means something to me. I'm not going to go through them all right at once, but I will show you one of the green dotted lines. My green dotted lines are my range numbers. Those are range projections. I come up with those at about 9 a.m. Eastern every day, and I have a pretty good idea of how far the market's going to move during the U.S. session. This is for WTI crude. Now, the question really becomes, okay, Shane, if you know where the market's going to go, then you should be able to trade it flawlessly. And I said, yeah, there's a little more to it than that, and this is a great example of why. So my green lines up here are going to be my ranges. This was yesterday's high. I always have those levels marked. You can see 64.21 was a big deal. Where did this flood of volume come in? If you're trading WTI, where did this flood of volume come in at about 12:27 Eastern time, 10:27 my time? I have no idea. I have no idea what sparked that. We had a news event earlier in the day that was sort of our EIA inventories report. Didn't do anything to the market. Didn't do anything. You had a little bit of a flurry right here. Not much happened. And then the market opened up, and the big institutions came in, and within 1 minute, you printed about 11,500 contracts. That's a big move. That's a lot of volume, heavy volume, move the markets north, right? So my first trade was right here. I was going to sell 64.60s, got in, got out. Nice, beautiful little scalp, loved it. That was great. But this one was even better, just to get back to yesterday's comments on key levels. 65 was a beautiful thing. 65, 65, 65. I had my range number 2. That would be my outer extremity range right there. My range number 2 was sitting right there at about 65.04. That was my sell. I'm selling 65.04 as I take a modest draw of about 4 ticks. I'm in, I'm out, and that's a day's work. Loved it. Loved it. So 2 really beautiful trades set up. That first one, a little bit dicey, but we hung in there. Got a nice little scalp there. This one right there was perfect. Right from 65, price broke above 65. Beautiful retracement right down to 64.72. Heavy volume, heavy action. A lot of people believe that's high-risk trade. Typically, that's where you're in with the lowest risk, is when the market's actually moving. And as long as you're not greedy, trying to pick a top or a bottom of a market, then you've got a chance to at least take some money out of the middle. And that's everything I do. It's tick scalping. That right there, I grabbed, let's see, off of that trade right there, I believe I grabbed 15 ticks on a couple of contracts. So add it all up, you got 2 winning trades, and you're walking away up about $250 on the day. Not really the day that I wanted, but it's definitely doable for today's leverage, what I'm using this far in the year. Now, you can see the market rallied right up here to about 65.53, and then it came right back down. It's rotating around my top range. It's at 65. So the question right now becomes, with about an hour, 28 minutes, or an hour, 18 minutes left of premium crude oil trading, what do I want to do? Do I want to buy it or sell it from 65? Don't have to do anything. Don't really know. Volume has dried up to nothing again. We'll get a flurry in about an hour, about an hour, 10 minutes. That last 5 minutes of the WTI traditional pit session, about 2:25 Eastern, you'll get a flurry of activity, and you'll either bid it, and we'll go above 65 and close, or we'll come back down in here. My guess is we rotate down. If I had to hold anything right now, I would be holding shorts from 65. But I'm not. I'm out of the market. That's the beauty of tick scalping. I don't really care what happens now. If we have a trade set up later in the day, we'll go ahead and take it. As of right now, we don't. So remember, if you're going to trade WTI over on the Switch Markets platform, you're just going to be looking for that WTI CFD. And I've got it in my market watch somewhere. If I can go ahead and pull it up and find it. You can see, right here, you got the futures contract, which is your CL6G or G6. So you could get in that one if you'd like, something like that. Interesting stuff, right? But you've got an opportunity to trade futures, crude oil futures, or you can also trade the WTI CFD, which is also another pretty good one. You can drag and drop that one in there as well. So a lot going on there. You can see that volume really kicked up right where I showed you on the other futures contract. And if you're trading WTI on a CFD platform, you're in pretty good shape. You can dial in your leverage perfectly, or you can also just trade that futures contract, whatever you really want to do. So there's a lot of options there if you're a WTI crude oil trader. Me, that's my specialty. That's my bread and butter. One other trade I'll show you out of my personal repertoire for today, and then we'll dive into our fundamentals, and I'll take any questions that you'd like on any markets that you like, and then we're going to go dive into our metals. We'll show you some macro levels for metals, also a recap. We put out a new trade idea on gold. I'll go ahead and dive into that, and then we're going to also sort of review what we're looking at potentially on the US 30. It hasn't quite come our way yet, but I have a feeling that we're going to get there relatively soon. Okay, so the next concept I'm going to show you is going to be relatively difficult. It's going to be sort of a look behind the scenes in my own playbook. And I'm going to show it to you. I've done this a little bit in the past, but this can be very advanced. If you're a brand new trader, bear with me. If you have any questions at all on this stuff, I'm more than happy to answer if I know them. Jeanette, good to see you, Jeanette. Welcome. All right, so here's the deal. Also, my two-pronged attack for right this minute. To be honest with you, I've been laying off of the gold and silver futures just a little bit because of the volatility. But the trades are there every single day. Probably could make a good living trading nothing else but gold and silver right now. But for me, I like that crude oil. Still in sort of the building portion of my year. I haven't really talked at all about the psychology of a trading year and what we need to do. I talk about the weekly a lot. Monday is prep. Tuesday, Wednesday, Thursday, pedal down, trading hard. Friday, what's Friday? Well, Friday is going to be preserving capital. So that's my mental game plan each and every week. And I know if I execute that over time, I'm going to have a heck of a lot more green Fridays, going into green on Friday than I will into the red. I know that for a fact. So how about your year? How do you want to trade during your year? Now, you need to be consistent with what you do. January typically can be a challenging trading month. It was a great trading month this year. It was a great one. February is usually a good trading month. So I want to be trading aggressively now in February. March, the same. April, the same. We start getting into the middle of May, maybe late May. Things start changing a little bit. You start to see the markets typically dry up a bit. Now, it may be different this year, but then we get into those summer months where all of a sudden the opportunities aren't always there. And then we come back in the fall and we're looking to start going hard after Labor Day, September, October, November, up until Thanksgiving. And then typically that's it for your trading year. Fantastic scheduling. If you can make it work and make money and actually secure a living in these markets, you have an opportunity to trade truly unique hours and work truly unique hours. But it's all predicated upon one thing, making money. You have to make money. And I've said it a million times, but you can make more money in 5 or 10 minutes knowing when you need to be in the market than sitting in front of this screen all day. I have no intention of sitting in front of these charts all day long. I'm not going to do it. I've done it in the past. I found that I don't need to do it. You don't need to be in front of them 24 hours. But what you have to do is you have to focus on when you want to trade and what you want to trade. So for me, my game plan was relatively simple for the last several weeks. I said, okay, gold and silver, sort of chaotic. We've got all different ways to trade them, but is there a better use of my time and my money? And I sort of came back and I circled back around. I said, you need to be looking at gold and silver all the time. But you also probably should be focusing on crude oil. Intraday ranges on crude oil are great right now. So I'm focusing there and also the euro. You say, Shane, why are you trading the euro? Nothing's happening. I go, exactly. It's a flat market. So I have an opportunity to trade rotation on that euro. And I also got an opportunity to trade rotation with big ranges on crude oil. Now, gold and silver are trending intraday. Every day is a trend. Every day, I mean, what's the move that we've seen today? Has it been an 8%, 9% top to bottom? And I'm going to give you all the levels here for gold and silver in a minute and a trade idea for gold. But in doing that, in isolating what exactly I want to trade, I can maximize my time and I can use my capital. I think of my capital as just a weapon. I can use it with its maximum possible force. That's what I want out of my money. I don't want to just get spread out going, okay, I got a little bit on the Nikkei, I got some on the yen, I'm trading Australian dollars, I'm trading gold, I'm trading silver. You don't need to do that. Now, if you want to do that, go ahead, but you don't need to do that. So right now, the focus is primarily crude oil, and it's also in the Euro FX. And the reason why the Euro FX futures, which it basically is the Euro USD, is because it's very slow. So this was my chart that I looked at and traded today on the Euro FX. Now, this was one of those days that was a bit of a challenge. If you weren't a rotational trader, it was a bit of a challenge. Still got some great support and resistance levels to play, but it doesn't look like they're going to happen today. Maybe tomorrow. We'll see. But this is what we're using here. We're using a time price offering chart, a TPO chart, which is essentially market profile, and we're doing it on a 30-minute time frame for Euro FX futures. Blue red. Those are my moving averages off the monthly time frame. Now, it's very important that we understand, okay, we're trading beneath my 13-period EMA and my Bollinger midpoint off of the monthly. This is what I call multi-time frame analysis. I mark these on my monthly chart. They translate all the way down to my intraday charts. I know this is a big deal in here. This is an area where the market's compressing, it's loading up, and it's getting ready to move. Now, for me, the game plan's easy. I throw my time price offering charts on there. I say, okay, what exactly is happening? I know that's my moving average, monthly moving average, harsh resistance today. Downside support. Downside support is what? It's going to be my Bollinger midpoint off my monthly. Beautiful trade right there off the U.S. Open. Let me see if I can, let's see. Let's go to my TPO, see if I can help you see this just a little bit better. Take our opacity down just a little bit. Just a little bit. All right, let's try that. Okay, well, that didn't work very well. But in any case, you could see where we're trading for each period of the day. Don't worry about the letters right now. We're not going to go through it. But this right here, this was sort of during that U.S. session. So that's 9 a.m. Eastern. What happened? Rejected. You can't see it very well through those volumes, but it rejected right there. Rejected my moving average. Beautiful trade. Came back down about an hour later. What happened? It's at 9:30 a.m. right after the opening bell. Ding, ding. Rejected my Bollinger midpoint. Rotated back up to what? The white line's the point of control. That's sort of the middle of this program right there, the point of control. That's where a majority of the business has been done. So we came back down beautiful. And then what happened? Well, we sort of washed that area out. Now we came back up to the point of control. Now we sold off and we're starting to rotate back beneath that 18 and a quarter level, which is that monthly Bollinger midpoint. So for right now, you show up in the morning and you say, okay, my premium hours are right during that London U.S. overlap. So I would say right in here, that's the first qualifier. Boom, boom. You've got two winning trades. Now, you could have tried it again down here and lost one. That's fine. You could have also maybe sold right here and got a scalp if you wanted it. Or you could have bought down here and tried to play a return back to the point of control. My point is this. I was trading support and resistance levels purely. You've got a moving average. You've got a Bollinger midpoint. Boom, there's your sell. There's your buy, 2-0. I mean, you probably made your month or your daily nut right there. So that was the game plan, relatively straightforward. And the beauty of this is, even let's get rid of our TPO chart. Coming into the session, I'm starting trade right here, right around this bar, 6 a.m. my time, 6:30 pretty much. I'm going, okay, what do I got? I know immediately going into the heart of our volume. You'll notice when our volume kicks up, that's when we want to trade. I know exactly what I'm going to do. What are you going to do? Right there, I said, okay, I'm starting trading right now. What am I going to do? Selling resistance, I'm buying support. Boom, boom. Beautiful trades. I'm in, I'm out, I'm done. Could I have sat around and hit these repeatedly? Yeah, I probably could have if I wanted to. You'll notice that as they're hit during the U.S. session, their efficacy does go down. Horizontal support and resistance levels lose their efficacy. So what's the next one? So what's my game plan later in the day? Nothing really. We've already sort of done the work. We've done the heavy lifting. We've hit the trades. We've won the money. What do we want to do now? Let's be forward thinking. What are we going to do tomorrow? You'll notice these are my range numbers, my outer range numbers for today. Not even close. We're not even close to those. Okay. What could we say about tomorrow's trade? If we keep selling off 62% of this weekly time frame, right there, 2-week range, 62% is right there at 117.95, big time zone. I've also got a daily moving average down there, 13-period EMA right there at 1777.5. I've got a pretty darn good area to attack tomorrow. So I know showing up to the office, I'm going to have a couple of trades that are premium trades on my radar. And then we're going to go through and I'll work my range numbers and I'll mark everything out on my other levels. And we'll be golden. We'll have a game plan. Now, is that more advanced than what we usually talk about, 9 EMAs and crossovers and things? Of course it is. And you'll be able to build things like that in the future if you stick with this long enough. You'll start to say, okay, I want to be able to trade everything. In order to do that, you have to be able to trade trends. You have to be able to trade rotation. If you cannot do those things, then you can't trade everything. And that's okay. Hey, listen, there's multimillionaires out there that are on your YouTube that are doing the private jet and the Ferrari and all that stuff. And all they do is trade trends. They look for whatever's trending and they say, okay, I've got some money. I'm going to throw it down and we're going to get after it. There's nothing wrong with that. Absolutely nothing wrong with that. Will it work for you long term? Yeah, there's no reason. If you're a trend trader right now, if you're an intraday trend trader, You should be trading gold and silver, no question. That's where the intraday trends are. But if you're a slow rotational trader, which I kind of like, I mean, there's not as much money. You don't get the huge moves and go buy the private jets. But when you're talking about playing for cash and grinding a living out in these markets, hey, you take $100 here, you take $100 here. Maybe you reach over there, you take $50 here. It adds up fast. So today, probably not as active as I should have been. Had a few trades. What are we looking at? 4 trades today? Pretty crisp day, though. No stress. In, out. See you tomorrow. And then after tomorrow, we look at our weekly figures and say, okay, are we going to get a payout right now? Because, I mean, if you have a good Tuesday, Wednesday, Thursday, come business close Thursday, I mean, it's Miller time pretty much. No donation Fridays in your head. You're thinking, okay, I've made $1,000 going into Friday. I'm already at least got 500 in the bank. Eventually, that's what this game can turn into for you. It really is possible. A lot of people don't believe it's possible. Well, I'm still standing. I'm still standing. And I wasn't a rocket scientist. I didn't go to MIT. I didn't go to Harvard. I didn't go to Yale. I'm not on the Epstein list. I wasn't hanging with billionaires. It can be done, but you're going to have to be shrewd and play the game by your terms. If you don't play the game on your own terms, then you start trying to make trades that other people are making, and it will not work for you. You've got to be dialed in, have an approach, I don't care what it is, and have the discipline to follow it. Gordon Williams, good to see you. Okay, let's see. I got a couple of questions, and then we're going to get into our trade ideas, run over some news events, and then probably call it a day unless you guys have a bunch of markets that you want to look at. Today's the day to do it. That Bitcoin level is probably the most attractive for me. I'm going to be looking at micro Bitcoin futures here and seeing potentially about grabbing a bid from that 50%. We'll see. All right. Yes, sir, gaming. I'm only in front of the screen for a max of 3 to 4 hours a day. Yeah, I mean, I'm in front of it probably like 8 to 10, but I'm not trading. My trading is limited. I mean, you're right. I mean, it's 3 to 4 hours a day, and even that, it probably isn't straight. It's probably more like an hour and a half at a time, maybe 2 hours at a stretch, max. But the fatigue, you've got to find a way to fight off the fatigue. If you sit here watching a 1-minute chart for 24 hours a day, you're going to get tired. And when you get tired, you're going to make mistakes. And those add up. Let me see. Jason, do you wait the first 15 minutes when the market opens? Yeah, I'm not doing anything on the market open. Let's go back to my this Euro trade. So right here, this would have been your opening bell, ding, ding. But this is a currency. So I would have already started trading right back here. Typically, you love to be in here when the volume typically kicks up. So right here, you're in the heart of the London session and the beginning of the U.S., not the beginning of the U.S. session, but typically traders are getting to their desk at about 8 a.m. Eastern. Now, the times on my charts are in mountain time. That's my time zone. So be sure to adjust your charts, translate your GMTs into the Eastern time, because you need to know when these volumes pick up. And with a futures contract, I know exactly when everybody's playing, and that's when I want to trade. So right now, you still have decent volumes in this Euro. I'm not really interested. So yeah, but if we're talking equities, which we're going to be talking here in a minute with the US 30, US 500, and US 100, absolutely. I'm waiting at least, I mean, on a good, typically 15 to 30 minutes, sometimes an hour. Wait for that first hour to set up and give you an opportunity maybe to see where support and resistance is, maybe where the volumes are. I mean, it just sort of off the top of my head here. I mean, let's look at the E-mini NASDAQ futures. Throw the TPO up. Okay, there's your TPO. So essentially what you would be looking for, and what a lot of folks look for, is they look for that first hour of trade. So there's bar 1 and bar 2. Got that point of control right up in here where a ton of business was done. And then you've got what else? You got this up here, your upper bounds, right up there, your value area, your point of control, and then your other value area. So lots of different ways to look at these charts. The biggest thing is not to get too confused by them. I got to show you my charts. So something like this. So you can see right there, value area to the top, value area to the low. For something like the E-mini S&P 500, you'll notice the volume spiked tremendously right around that U.S. Open. That's exactly when you need to start thinking about trading. But here's the deal. There's a lot of volume in there. And your technicals, you're going to find your technicals don't necessarily function as well when there's that many players in there. Now, I got to sort of preface that because when there's no volume in the market, your technicals also won't work. So you've got to get in a situation where it's not an overwhelming amount of volume, but it's also not too sparsely populated. Something has to be moving the market. That's volume. That's orders. So the way that we do that is we isolate when it's the most likely times to have action in the market. When are people trading the U.S. equities? They're trading them during the U.S. session, no question about it. You can see it right here. These futures contracts, the volumes do not lie. Very, very small volumes, and then we spike and we get ready to go. So for me, I find typically that action in the first 30 minutes to 60 minutes typically is a little bit hot for me. So I want to see the U.S. equity set up for an hour, and then we can start making decisions. And that really is the basis of the opening range breakout. I mean, like you say, if we want to play a 15-minute opening range breakout, let's have a look. Okay, right there, opening bell, ding, ding. Second, ding, ding. There it is. There's your opening range. There's your orb. 15, first 15, second 15. What do you got? Right there is your entry. You actually traded inside until about when? About 11:30 a.m. Eastern. And then right there's going to be your sell. There's your sell, and we're coming off. Interesting. Interesting how you can frame your trading day. It just really all depends on what you're trading. One of the biggest challenges that anybody has, and the number one thing that I get. All right, let's just cut through it. This is a good psychology day. 95% of traders supposedly fail, right? The only reason you fail is because you end up quitting. Why do traders end up quitting? Because they lose money. I would say of that 95% that quit because they lose money, there's about 3 different issues that plague everybody. Number one is trying to fight trends. Dollar cost averaging, adding to losing trades, going against prevailing trends. That's the way that probably of that 95% that lose money and quit, I would say probably 70% are doing that. That's number one. Number 2 is over-leveraging and chasing. Instead of getting caught the wrong way on a trend, they take a loss and then they want to get back in the market and trade right away, and then they increase their leverage to get back the money they lost and then the positive money. That's probably of the last 30% of those losers, I would say probably 20% of them are doing that. Or 80% of that are doing that. So you basically have 2 reasons why people are losing their money. Number one is fighting against trends and letting the stops go way too far against them and adding into losing positions. That's number one. Number 2 is going to be over leveraging and over trading all balled into one. It essentially is the same problem you're chasing. All right. And then lastly, and it's the one that nobody talks about. We talk about it a lot. I get the questions a lot. Trading at the wrong times. Now, we have all sorts of devices to help you try to time the markets. The bottom line is, as a retail trader, you do not have the money to take a position and hold it. You just don't. Believe me, I was in a couple positions today with multiple contracts, and if those would have blown up in my face, I knew exactly where I had to get out. I wasn't gonna mess around. All right. If you're in the market at the wrong time, things don't work. Technicals don't work. They work, but they don't have quite the efficacy that you're looking for. So if you're trading, say, a Fibonacci retracement or maybe a moving average crossover during the early U.S. session on say, an S&P 500 or a Dow 30, you're going to notice that it's probably going to function better because there's more action in the market. The market is deeper. There's more traders there. There's more volatility there. There's something driving the train. There's something pulling the train, and that's what gives us opportunities. Now, when the markets dry up, there's nothing there. Price action gets choppy. Bid-ask spreads get big. It's a non-starter for most traders. So, of the remainder of the 95% of people that lose, remember 70% of those folks that end up quitting are fighting trends and scaling in when they shouldn't be doing that. That's a big reason why people get blown out and quit. The other one is going to be chasing and over-leveraging. That's a more aggressive problem. It's not quite as intuitive as fighting trends. Hey, it's easy to get caught on the wrong end of a trend. You just got to be able to get out. But over-leveraging and over-trading, that's a more aggressive thing, but it does play to our human nature because we always want to make money for a day's work, right? And the last one's not knowing when to trade. So you've got to know when to trade. And a simple rule of thumb is this. You want to trade when the markets are deep and when they're active. That's going to be different according to product. So if you're going to trade the Japanese yen, like Yesser was, trading the yen, you're probably going to want to do that. Either if it's a dollar yen, U.S. session's pretty good. London U.S. overlap's good. Maybe after the Tokyo Open, that's pretty good too. If you're trading U.S. equities, you're going to want to target the U.S. trading day. That's when the volume's there. If you're going to trade commodities, something like a WTI crude oil, you want to trade those traditional NYMEX pit hours. Well, I've made a video on it. I've talked a lot about that. Gold's interesting. Gold, you're going to want to target probably right around the London Open. If you're scalping it on short time frames, London Open, U.S. Open, during that overlap, that's probably when you want to trade gold on intraday bases. Now, if you're going to swing trade, you don't have to worry about any of that. You can just go ahead and build multiple day positions, and you don't have to worry about the time of day. My point is this. That last faction of people that lose money don't know when to trade. They don't know how to apply the strategy to the exact time they need to be doing it. If you're a scalper, you've got to know when the market's active. If you don't, ask. If you don't, run some Google searches, go on ChatGPT, do what you got to do. Find out when the market's moving. If you're a swing trader, find out which days of the week you should be holding a position over. I mean, if I'm swing trading something like a WTI CFD, I damn sure know that Wednesday, that report, that EIA crude oil numbers report is going to shake the market up. I know that. So I've got to factor that in. If I'm trading the euro, I'm going to take a multi-day position on a euro. I better know if the Fed's meeting. I better know if NFP is coming my way. I've got to know all of that. So we've got tools. We've got all sorts of EAs you can use. We've got session planners, everything. They've got it all over there. Switch market session map. I mean, anything you need, economic calendars, whatever you need to plan your trading day, it's all there. So it's doable, but you've got to work at it. So you could really improve your chances of making it in this market by not fighting trends, not scaling into losing trades. Number one, knowing when to trade. Number two, and number three, having a good risk management plan. Don't lose one trade and then triple your size on the next trade no matter what to get the money back. Avoid those three things and you're probably going to be around a while. Then it's just a matter of refining your strategy, figuring out how you want to trade. That's not as hard as you think. But if you don't get rid of those problems, you're going to have a real problem. That's for sure. All right, guys, let's see here. Yes, sir. Yes, sir. I completely agree. Follow your own process. It's got to be you. I mean, I can't sit here and tell you how to trade and when to trade. I can show you sort of some of the losses I've taken and give you some advice, but I can't tell you what to do. That's for sure. You gotta build this for yourself. This has to be a product of what you do, and you just got to stick to it. Let me see. Eli, 512 Eli, 95% don't have a goal. They don't have a goal. It's 100% right. And here's the thing about a goal. It's got to be realistic. The other thing about a goal is you have to believe in it. You absolutely have to believe in it. Now, a lot of people sit down in front of these screens and they go, okay, I want to be a millionaire. Okay. What's it going to take to get there? You're going to need to be dedicated, disciplined, and then you're going to have a format, a strategy that you're going to trade to. You're going to have to be able to apply that strategy without hesitation, and then you're going to have the money and the capital to apply that strategy that's going to give you a chance to make the million. So the goal is important, but you have to have the resources that support the goal. There can't be any conflict. And the last thing I'm going to say about a goal is this. Don't ever let anybody tell you your goal's stupid. I show up to the market every day to make money. Make money every day. That's my goal. It doesn't have to be yours. You could be a swing trader. You could be a position trader where I lose 5 days in a row, but on that sixth day, I make back all the five and then a bunch. That's how most of the big guys trade. They don't trade like me. But my goal is to show up to the market and make money every single day. That's it. That's my goal. I know that if I can do that, I'm going to be a success. Everybody says it can't be done. I think it can be done. Maybe not every day, right? Yeah, but most days, a vast majority of the days. And what it all boils down to is not letting your losses be too big. Be around to trade tomorrow. Every single one of your goals, you're going to have to be able to do that. But definitely pick an objective. Pick something that you think is achievable, that you're okay with. That also staves off boredom. You don't get bored when you're working towards your goal. Timing is one of the 48 bylaws. Yeah, you got to be able to time things. No matter how you do it, you need to be able to do it. Timing is 48 laws of power. There you go. Daily goal, weekly, and monthly. I agree completely, Eli. I don't worry about sessions too much. Just make money every day. I feel pretty good about. Usually if I do that, I'm where I want to be by the end of the week. Usually. Some weeks are down, though. You just got to be able to come back and get after it. All right, everybody, I've talked a little bit too much about psychology today. Let's get down to the nuts and bolts of this stream. Mortgage rates fall. XAU USD is back on the bull. I put this one out a little bit earlier today. Let's go ahead and pull up the trade idea. Interesting trade idea. Since I pulled it out, since I pulled the chart, you can see that we put this one out earlier today. It was looking pretty good for gold. Life was good. You're sort of driving up towards the back end of this golden zone up here at about 51.40-ish, somewhere in that. You didn't get a test of that zone. We were looking to sell up here, 53.42. Still interested in doing so, but the market is definitely reversed. It's definitely reversed for us. So this is going to be one of those things that potentially could come to us maybe later this week after NFP. But right now, you've lost a handle on 5,000. I expect us to go back up to 5,000 in gold. But for me, I have no problem selling up there for a scalp type of a trade. And it's a big scalp, too, because the volatility is huge. If you're going to take a trade, make sure that it's worth your time and your money. That's for sure. Let me see. Ralph H. says, having an edge. Yeah, if you've got an edge. Remember the edge, though. That's a good point. We'll talk about that edge here in just a second. Thanks for reminding me, Ralph. Right here, 78%, 53.42. So that idea right there would be your sell, sort of the downside. I'll update you. That's not going to come into play today. Will the US 30 ever test 50,000? I think there's no way around that. When we're looking at the key level of 50,000, I mean, there it is. 50,000 to the top side. All right, we just had a bell go off. Hang on. All right, there's our sell. So right there, you have a sell with our 9 EMA, and this would be on WTI crude oil. Right there's your sell order. We got the notification popped up in your big purple caret. You can't really miss it. Why did we get a sell right there? And I know I'm jumping around, but just bear with me. This is systems trading. 1 minute chart right there. We were overbought over above 70. And then that right there was our sell signal. This would be a really beautiful trade because it could be very simple. Let's see if I have enough margin money to sell it. I don't think I do. I think I blew it all out on one of those decoy silver trades the other day. All right, let's go ahead and sell it. Yeah, I don't have the margin money to do it. In any case, you would be rocking a sell here. Let's try that one. All right, we got it down. This is not for much money, but here it is. So we're off and rolling. So the trade is about as tight as it gets right here. Okay, we want to get this executed and get this down just to sort of demo this. But our EA is working just fine. So right there's our sell. What's our stop loss going to be? It's the first thing I always say to locate. Stop loss going to be right up above that swing high. And then where's your profit target going to be? It's going to be at least a 1-to-1 down there. So let's go ahead and shoot for market structure and see. Maybe we catch a runner, something like that, down towards the bottom of this market structure. But that right there is the template. That's the idea. I like this EA. This is a pretty good EA. We got to build the video and get it out. It doesn't look like it's coming out till next week now. We've had some issues in the back office. Folks are busy, but it's already built and ready to go. This could be pretty good. I mean, it does work. You just got to be able to dial in your risk versus reward. In any case, back to what I was saying about the US 30. So essentially what we're looking to do here is test 50,000. And the key with that situation is going to get a little bit of a bullish run, but not too much to take out 50. So let's go into the charts. The sell is going to be right in here. I believe it was 49.925. And the idea is going to be to try to get a nice short-term retracement before we shatter 50,000 and move to the top side. So for me, I'm watching that closely. I think it's going to be a nice little opportunity for us to get a pullback. The one thing that does have me a little bit concerned is the compression that we're seeing in front of 50,000. Something like that. That's what we're loading up. It feels like the market's loading up and then potentially ready to make another leg higher. I'm not really thrilled with that formation. I'm not thrilled with it. I don't feel great about it, but I also don't feel bad about it. As long as we don't start getting compressed right in this zone, I think we're going to be all right. So I'm going to go ahead and still want to sell that. This is a trade idea that we've had out for a while, but you can see even on our weekly time frame, we're starting to get a bullish flag set up. There it is, sort of your bullish flag. Compression. It's really just the compression's settled in. Right around here. Right in there. So theoretically, this should be our flag. The longer that we trade in this flag formation, the greater chance we have of breaking out. Not just a little bit, but significantly. So what we would have loved to have done is got this week and then gotten the compression. But if we trade in this zone for a couple more weeks or maybe just the rest of this week and the early next week, probably going to pull this thing. Probably going to pull this trade because you don't want to get caught up in a breakout. You don't want that. You don't want that. So definitely there's a trade update there. As far as our economic calendar goes for today, it was active. Not really a huge number of huge market moving events. We're going to talk a little more psychology here in a second. I want to talk about an edge and what that means. But for today, Wednesday, was the EIA crude oil inventories report. We also had a bunch of other sort of peripheral metrics. The NBA 30-year mortgage rate came down. Mortgage rate's coming down. I want to see it go under 6. If we don't go under 6, I'm not really going to believe much of the move. As far as what that means, those yields coming down, that means that really the powers that be believe we're gonna be in for a period of dovish monetary policy. They believe that maybe that federal funds rate is going to come down over time. I tend to agree. Still, mortgage applications way down week over week. It's not a good trend. The housing market's starting to soften here a little bit in the United States, but not nearly as much for those of us that are looking for real estate and property. It's just not that good. As far as what we've got here, ADP non-farm employment change, 22,000. That was well beneath expectations. We're going to cover employment more this week on the U.S. non-farm payrolls live stream. That's on Friday. Be sure to tune in. And then here's the news of the day. Crude oil inventories came off. That's one of the reasons why we moved higher today. That was a real surprise to the market, down about 3.4 million barrels. I'm not really too concerned about it just yet, but we have to really admit that crude oil is trading $65. We're not in spring seasonality yet, so my eyes are on the Iranian situation. No question about it. Absolutely no question about it. S&P Global Services PMI, these service PMI numbers don't mean much. They're all looking at the U.S. economy. I know it says S&P Global. Don't pay that any mind. It's just the name of the company, S&P Global. So this is looking at the U.S. the U.S. services sector. Services sort of ticked a little bit higher. I would call that a throwaway number, pretty much in line with expectations. You've got the ISM non-manufacturing prices, which essentially is services. Came in at 66.6. That's above 65 and above 65.1. And then the non-fat manufacturing PMI, you're right there at 53.8. So all in all, not really a whole heck of a lot to write home about there. So your news of the day, nothing really blowing us away there. Probably the biggest news today was going to be your EIA crude oil inventories coming in a little bit down for this time of year. Not necessarily the best type of scenario. All right, we got a couple of news things, and then we'll go ahead and close with some psychology. As far as what we've got going here, government shutdown. Trump signs the bill to end the government shutdown and fund the Department of Homeland Security for 2 weeks. So we're going to be right back in this mess here in just a few weeks. The Democrats have pretty much every intention of being obstructionists, and I understand it's for political reasons. This is an election year. So the shutdown is officially over, but it's probably coming back very soon. Fascinating how all this is sort of playing out. If we get to a situation this spring where they can't pass the final budget and it looks like we could see a major pullback, maybe some things coming out of that big, beautiful bill from last year, then we could definitely see some market tumult. There's no doubt about it. So definitely going to keep an eye on this situation as the spring rolls on. But for now, the government's back open for business. So I guess they're going to send out checks and everything. I don't know. Warsh nomination. This is interesting right here. This is going to be another political thing. Remember, it is an election year. Fed pick. Tillis doubles down on Warsh blockade over concerns about central banking independence. Senator Tom Tillis doubled down on his vow to block Federal Reserve Chair nominee Kevin Warsh until the Department of Justice concludes its investigation into Fed Chief Jerome Powell. So what do you have here? You have Jay Powell has a friend in the Senate. He says, I'm going to bring this whole thing to a halt if you don't end the investigation on Powell. That's it. The North Carolina Republican has the ability to deadlock any Fed nomination on the Senate Banking Committee, preventing it from reaching the Senate floor. This is interesting. So basically they're saying wrap up your investigation of Powell and the Fed, and then I'll go ahead and approve your guy for the vote. This could really delay our timetable for those rate cuts I talked about. They could delay it. So I'm expecting the DOJ they're going to say, well, what's worse? We need a new Fed chief. I need to get rate cuts in now. So the idea is going to be they're probably going to end the investigation into Powell to get Warsh through. This is interesting. This is a Republican, Tom Tillis. So clearly he's a friend of the bankers, no question about it, and wants to pretty much dictate policy. That's going to be a potentially big story as we roll deeper into this year. No question about it. Let's see. What did we get? How did our trade pan out? All right. Winner, chicken dinner. Very nice. Our WTI trade, very beautiful. The thing that I liked about that trade right off the bat is, number one, it was cheap. There's nothing wrong with taking cheap trades. That was a good one. That right there, stop loss was right there. You had a chance to hit the 1.5 to 1, 2 to 1, something like that. And that was an absolutely fantastic trade, phenomenal trade. Not bad at all. Okay, guys, let's see. We had a couple of things, a couple of questions there in the live chat, and then there was a comment here from Ralph H. Says, having an edge. And the beauty about having an edge, and it's something that nobody talks about, and it's sort of an old school type of an idea. An edge can be a lot of different things. Now, when we think about an edge, it's a strategic edge. That's what everybody on YouTube talks about. That's what everybody on these live streams talks about. That's what everybody that's got a black box strategy that's trying to sell you, or signal providers that are trying to sell you things, that's what they do. They say, I've got an edge. We've got an edge. All right. I don't just believe that a strategy in itself is an edge. If that was the case, you would have a lot more millionaires in the markets than you do now. There is no holy grail strategically. I've showed you over the past 4 years, I guess, of live streams. I've done thousands of these live streams. Probably over 1,000 at least. Hundreds of these live streams. I've gone over trading strategies, range trading, trend trading, Fibonacci's repeatedly, moving average crossovers, 9 EMAs, opening range breakouts, market profile, time price offering, RSI. I mean, we've done a lot strategically, and none of them don't mean anything if you can't manage them and build your own risk management and stick to it. Now, what we talk about with an edge is that everybody, okay, give me your strategy. Give me that code. That code will give me an edge. None of it means anything without you. You are the edge. You can build yourself into the edge. And what that edge is showing up every day saying, okay, I know what I'm going to risk today. I know what I'm looking for out of the markets. If this thing comes my way, I'm going to have a very good chance to win. A better than average chance, a better than the next guy chance. That's your edge. And that edge is psychology. Now, a lot of folks believe that being receptive to risk and being one of those people that can just, okay, I just got hit for 10 grand, but I'm still in there and I'm willing to do this. A lot of them believe that that's an edge. I don't see being hyper aggressive as being an edge. I see executing a game plan as being an edge. If you can do that, you got a great chance to win. Nobody's talking about these things because they want you to believe that you need the code that they're selling, or that you need to watch their live stream, or that you need to watch this YouTube video, or you need this game plan, or you need to follow me. I'm the edge, and we're going to take you to the promised land. None of that's true. You are the edge. There's a great movie out there. It's got a lot of foul language in it, but it shows the pit traders from back in the day. It's called Into the Pit, or Floored, Into the Pit. And it's on YouTube, and it's free. And there's a guy in there who is, it's funny because the guy clearly is lost mentally. He's lost. He's drinking heavily. He's an alcoholic and can't really form words very well, but can do a lot of things, and was a trader that made a lot of money. And part of what, when he started saying when he got started in the pits, he'd say, I didn't have any money really. I was looking at everybody I was trading against. Their wristwatch was more than I had in my account, but I showed up and I said, I can beat these guys. I can beat them. That was his edge. That belief in himself was his edge. Now, does it work long term? A lot of people believe that you can't do this long term, that you just have to get in and get out, that it's not something you can have a career in for a long period of time. That's not true. You can do this for a long, long period of time. Now, even if you're a strategy trader or a black box trader, I talked about this earlier, where you're going to have to know when to pull the plug on your strategy, or when to tweak your strategy, or how to stick to your strategy. That's all you. I get really tired of it, and I'm a positive guy. We keep it positive around here because I don't believe in showing up and being Mr. Negative. If you want that, just listen to the podcasts. Almost all of them are negative because that's what sells. Doom scrolling, that sells. Edgelording, people that are just mean, that sells. Try to stay positive around here because you have to have that belief in yourself that no matter what comes your way in the market, you can handle yourself. That's your edge. You don't need some special code. You don't need a strategy that was developed by, MIT vet. You don't need any of that. What you need to do is focus on, we've already covered it, get rid of those 3 mistakes. First thing you do, get rid of those. You don't fight stiff trends. You don't scale into stiff trends. You don't over leverage and chase and figure out when to trade. That's first. Know that you can't do those things and win long term. That will get you. The next thing is to look at a strategy that is sort of what you want to do. You have to be able to trade without conflicts. If you hate trading opening range breakouts, don't trade them. Find something else. If you love moving averages, do it. If you hate the 9 EMA and think it's the dumbest thing you've ever seen, then don't trade it. Don't worry about it. If you want to be a swing trader, you say, Shane, I can't sit in front of these computers every day. It puts me in a bad mood. I hate it, but I want to trade. Swing trade. Boom. MT5 on your phone. Right there. Boom, boom, boom. Done. Carry your swing trades in your pocket as you're out hiking or hitting the gym or maybe working a job. Play it on your terms. But to make it all come together, you have to have belief in yourself. You have to believe that you can do it. And what that comes from, it comes from years in the market. It comes from enjoying trading. And it comes from experience and having the success that sort of validates what you're doing. And success isn't always just money. Success, the best trade I took yesterday was one that I cut off and took a loss. Shorting. I was shorting the Euro FX futures early in the session. Cut it off. Took a $100 loss. Thing trended against me. I would have been dead. That's success. Getting caught in a bad trade and getting out with your shirt, that's success. Making $10 million, yeah, of course that's success. But, having it up here every single day when you're in front of the screens, that's what it's all about. So you can be your own edge. You really can. You can. It is possible to be a good trader. You don't need all the technical tools or anything. So something to think about there. All right, everybody, I'm going to go and sign off. I got a bunch of comments here. I'm going to go ahead and go through these. Let me see. Pip and points are the goal. Money goals. Absolutely. There's nothing wrong with a pips per day goal or a money goal. Absolutely right. Let me see. Great Britain pound Australian dollar reacted nicely to gold reversing. The Aussie is really tied to those metal markets right now. If you're trading the Aussie, you need to be watching metals. Let me see. Nico, are you looking at anything in the Forex? Not right now. Not right now, Nico. I'm going to have something else. We put an Australian dollar trade out earlier this week. It's starting to come our way. Let me see. So this would have been, the Aussie trade. This is what I'd be looking at in the Forex. Sort of a spike low there, spike high, 3-month range. We're starting to move to the top side, but still we've got an opportunity now. Ignore the overlay for right this minute. What I want to focus on here is this big level down here, this 68, 68.37. That's 38% of this monthly range. Let's take this down to a daily, right? We covered this yesterday. So you've got your daily, really a beautiful market structure right there. A spike low to a spike high. There's your pullback. Sort of rejected 38%. Pretty good move off of that RBA. Now we're coming down a little bit. 62% on that daily lines up beautifully, and I mean beautifully, with that monthly trend. So we have an opportunity there potentially to get a little love. I like that. I think we've got a chance there. So pretty good stuff. I'd be watching that closely if we do get the retracement for a Forex trade maybe a little bit later this week. That's for sure. That's what I'm looking at, Nico, that Aussie. Team Marina, isn't an edge as basically an expectancy of something you do repeatedly that produces positive results? Absolutely. That's a great way to put it. It's a positive expectation. So how do you know you have an edge? Well, there's an infallible way in the markets you're making money. And making money isn't just a product of your system working. It's a product of you executing the trades, managing the system, and knowing when to run it. So if you're making money over time, then you have an edge. Anybody can sit down and make a bunch of money in one day. There's gamblers out there that love the markets. They take huge risks. They make money some days, they win some, they lose some. But yeah, an edge. So like, in team sports, if your team's winning more than it's losing, you have an edge. Clearly you're better than the competition. On any given day, you're probably going to win as opposed to lose. So that's exactly what an edge is, T. Perfectly put. Isn't an edge basically the expectancy of something you do repeatedly that produces positive results? Absolutely. I don't really care what it is. I mean, if you get up in the morning and run 5 miles and you trade profitably every day after you run 5 miles, you better run 5 miles before you trade. That's your edge. Maybe your edge is just being clear up here mentally, your ability to focus. Look to the left, trade to the right. Nice. Let me see, 512. I still use MT4. Yeah. Nothing wrong with that. MT5 is a pretty good upgrade, though, especially with Switch. You get thousands of markets, whereas you just get a few hundred with the MT4. But MT5s, here in the States, I've never traded really with MT4-5, but I do like the order entry mechanism. It's not bad. It's a marathon, not a sprint. That's a fact. You don't want to burn yourself out. Golf's. Gold's moving unbelievable. What is gold doing right now? 49.27. Let's go over to our gold chart. Let's take this down to a 1 minute chart. That's astounding volatility. Look at my ADR down here. Average, they call it a daily range. It's a periodic range. Look at that. 13 period ADR, we're looking at 449 for 1 minute. That's a big deal. You probably buy 25s and get away with it right here. High risk, given this much volatility. Yeah, right in there on this 1 minute. I mean, really beautiful market structure. Fantastic market structure. It's just about, can you get in and get out and get filled and do all the things you need to do to make a little bit of money here. Probably be looking for like a nice little bounce, something like that. So what would our edge be here? The edge would be we know exactly what we're going to do. It's not necessarily that the Fibonacci is 100% winner, because it's not, especially in this environment, but we know exactly how we're going to do it. We know that we're going to get a touch. If we get filled, we're going to bounce, and then we're out. And if it draws against us, we're going to go ahead and wipe this thing off the board and come back later. The thing I don't like about this is it doesn't have a flatten button on this trading dome. So, yeah, we'd have to look to sell. In any case, that would have been our trade. Came right down looking for that bounce. Just didn't quite get it. All right, everybody, I've gone on long enough. I'm going to go ahead and take off. Let's see. I love Trade Locker. Makes things so easy for me. That's great. Yeah, if you find something that works, go with it. Yes, sir. Let me see. Universal. Hi, Shane. Zone are way bigger on the gold. In gold on daily. Very hard to set the risk. The risk is way bigger just for the entry and suitable stop. Absolutely. But remember, just because you're trading a daily chart and levels off your daily chart doesn't mean that you can't have a finite risk versus reward sort of developed. You know, you don't have to just sit there and say, okay, I've got to trade this according to the time frame. I mean, you can also just have long-term levels and play bounces off of those no matter what. That's for sure. All right, guys, that's plenty for me today. You have a fantastic trading session. We're going to be back tomorrow. We're going to have a lot going on here. Gold is just absolutely putting on a light show. That's unbelievable, unbelievable volatility. So if you're trading that and if you're in there, best of luck to you. Keep your discipline. Keep your head. Remember, don't lose it all in one trade. Good risk management is the key. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.